side.
Thank you very much, Vivek, for that. Let's talk about the market technicals. Is there a trade that one could recommend? Sudeep Shah, Head of Technical and Derivatives Research at SBI Securities, is with us on the show. Sudeep, the markets are trying to inch higher, conquer the recent resistance levels, and perhaps trying to break out on the way up. And this comes after a very long period of consolidation and sideways move. Are you seeing any trade? Is there upside at current levels? Sudeep, can you hear me?
Yeah. There's some network issues. Yeah. Now.
Okay. Just wanted to understand how you're reading the markets right now. We've gone through a long period of consolidation where markets have traded in a very tight band of 18,000 to about 18,300 on the way up. But today we've conquered the resistance levels of 18,350. Does that result in upside from here on, or do you think this is, perhaps the upper end of the trading band still, and therefore we could retrace?
Good afternoon, Rima. See, what we've seen in the last month or so is that Nifty, since 1st of October, it has been up by 6%, while Midcap indices have been flat. So there's been a divergence with respect to the market breadth that we have witnessed. But what has happened is that the Midcap had already run up earlier prior to the Nifty move beyond 17,800. And if we just try to see the last 7-8 sessions, Nifty has traded in an extremely tight range. It is indicating consolidation at higher levels. But what is important is that the support zone at 18,100, 18,150 is not being breached. One silver lining, what we can see is positionally since 17th October, Nifty has been successfully holding its 13 EMA zone of 17,300 and steadily moving up without even breaching it once. So, and currently this 13 EMA zone is placed at 18,200. So we recommend that till this zone of 18,200 holds, the overall trend has to be buy on dips. And banking has been an outperformer till now, but in the last few days we have even seen IT giving a helping hand, and that is the reason now when both the indices are positive, we feel that the current up move could continue up to 18,600, 18,650, which is the previous all-time high, and the stop loss and the support for the same would be 18,200 on the downside.
All right, Sudeep, in that case, what would your individual technical picks be?
My first technical pick would be Aditya Birla Capital. Now, this stock had moved from 110 to 130, say between 21st October and 10th November, and then it went into a sideways consolidation, and it thereafter retested 123 zone, which was the 61% retracement of the entire up move. Also, the 20 EMA coincided at the same level. Now, a strong support zone has been built around that zone, and the stock is about to witness a symmetrical triangle breakout now. So the pattern wise, we feel that this stock is headed up to 145, 150, and the stop loss for the same would be 120 on the downside.
Okay.
The second...
Go ahead, Sudeep.
Yeah, the second stock would be Cummins India. Now, the short to medium term structure is positive for this stock. It is sustaining above its key moving averages, and post a rally from 1185 to 1350 roundabout from 25th October to 1st November. It was a very steep rally. The stock had consolidated at higher levels in the last 2 weeks, and now it is witnessing a flag breakout with a rise in volumes. So we feel the momentum herein also could accelerate, and any dip up to 1360, 65 should be used to go long, with a 1325 stop loss and a 1430, 1450 target on the upside.
Okay, all right. Thanks a lot for joining us, taking us through your view on the markets and individual picks as well. With that, we'll do one